Investing and trading are often used interchangeably, as if they represent the same path to financial growth, but they are fundamentally different. Investing is the process of allocating capital into assets with the expectation that their value will grow over a long period of time. It is grounded in patience, long-term thinking, and the belief that value compounds when given enough time. Trading, on the other hand, is the act of buying and selling assets over shorter time frames, aiming to profit from price movements. It is built on timing, speed, and precision. One focuses on where something will be years from now. The other focuses on where something is moving in the moment. Both can create wealth. Both can destroy it. But they demand completely different ways of thinking. And yet, you're staring at a chart again. Not because you fully understand what you're doing, but because you're hoping something finally makes sense. The candles move. Up, down, fast, unpredictable. For a moment, it feels like opportunity, like you're close to figuring it out. Then hesitation creeps in. You wait. You second guess. You miss the move. Again. You open another video, listen to another explanation, search for another strategy. And deep down, you already know what's happening. You're collecting information, but you're not gaining clarity. Because the issue isn't knowledge, it's direction. Hi, I'm Eugene, and I dedicate most of my thinking to finding the best ways to secure financial freedom. And if this is what you desire, do well to like and subscribe to the channel so others can learn these secrets too. So, your day starts with intention. You tell yourself today will be different. You'll be more focused, more disciplined. You'll execute properly this time. But as the hours pass, the same pattern repeats. You check prices, you react emotionally, you hesitate when it matters, you act when you shouldn't. And by the end of the day, nothing has changed. Not your financial position, not your confidence, not your understanding. Just another cycle completed. And the weight of that repetition begins to settle in. Quietly, persistently. It's not loud enough to panic you, but it's heavy enough to stay with you. This isn't happening because you're incapable. If you were incapable, you wouldn't feel this tension. You wouldn't feel this internal push for something more. This discomfort exists because you can see the potential. You can imagine a different outcome. Financial freedom doesn't feel impossible to you. It feels just out of reach. And that's what makes it frustrating. You're close enough to believe in it, but not clear enough to reach it. And in that space, you've been moving without committing, shifting between trading and investing without fully understanding either. You see traders making money quickly, fast decisions, immediate results, screens filled with movement. It looks active, engaging, alive. Then you see investors like Warren Buffett, who built enormous wealth not through speed, but through time. Decades of consistent decisions, no urgency, no constant action, just alignment and patience. Two paths, both real, both effective, but completely different in nature.
The confusion begins when you try to combine them. You enter trades expecting long-term growth. You invest, but panic at short-term drops. You react to price even when your intention was to hold. You hold positions even when the logic was short-term. This creates internal conflict because your actions don't match your expectations. And over time, that misalignment compounds into inconsistency. Not because the strategies don't work, but because you're not operating within the rules of either system. But here's the truth. Trading and investing are not just financial decisions. They are psychological commitments. Each one requires a specific identity, a specific way of thinking, a specific type of discipline. Trading operates in compressed time. Decisions are made quickly. Feedback is immediate. You are constantly exposed to uncertainty. This creates pressure. Every movement matters. Every decision carries weight. Traders like George Soros succeeded because they understood not just markets, but behavior. They learned how to act under pressure without letting emotions take control. Because in trading, the biggest risk is not the market itself, it's your reaction to it. Fear causes hesitation. Greed leads to overexposure. Impatience creates unnecessary decisions. And these emotional responses compound into outcomes that feel unpredictable but are actually consistent reflections of behavior. Trading gives you control over timing. You decide when to enter, when to exit, when to react. But that control comes with responsibility. You must be present, focused, disciplined. Every moment tests your ability to remain consistent, and inconsistency is expensive in a system that moves quickly. Investing removes that immediacy. It operates on a different timeline. Instead of reacting to short-term movement, you align with long-term value. You ask a different question, not what is happening now, but what will this become over time? This shift changes everything, because now time becomes your advantage. Instead of working against you, it works for you. Instead of compressing decisions, it expands them. Investing requires patience, but not passive waiting. It is active trust. Trust in your analysis, trust in your decisions, trust in the process. And that is difficult because the early stages of investing feel slow. There's no immediate reward, no constant feedback. It feels like nothing is happening. And in a world that rewards speed and activity, that can feel uncomfortable. But this is where compounding begins, quietly, gradually, almost invisibly. The analytical difference between trading and investing can be broken down into time horizon, control, and behavior. Trading operates in the short term. It requires constant engagement and rapid decision-making. Investing operates in the long term. It requires consistency and restraint. Trading gives you short-term control, but increases pressure. Investing reduces short-term control, but increases long-term stability. There's also a deeper dimension, self-respect and discipline. Trading tests your discipline in real time. Every moment exposes your ability to remain controlled under pressure. Investing tests your discipline over time. It challenges your ability to stay consistent without immediate validation. Both demand discipline, but in different forms. One is active, the other is passive. One requires action, the other requires restraint. When it comes to benefits, trading offers speed. It allows for quicker results and immediate feedback. It creates opportunities within shorter time frames, but it also comes with higher emotional demand and increased exposure to mistakes. Investing offers stability. It builds wealth gradually but sustainably. It reduces the need for constant attention and allows systems to operate over time. The advantage of investing lies in compounding, not just financially, but behaviorally. Consistency strengthens results over time.
This is why individuals like Warren Buffett emphasize long-term thinking, because the real advantage is not intelligence, it is consistency applied over extended periods. And this is where everything shifts. The question is no longer which one is better in theory. It becomes which one aligns with who you are or who you are willing to become. Trading requires emotional control, speed, and constant awareness. Investing requires patience, trust, and long-term thinking. Both paths demand growth, but only one will work if it matches your behavior consistently. Because without alignment, even the best strategy fails. Not because it doesn't work, but because it is not being applied correctly. You hesitate when you should act. You act when you should wait. And over time, that inconsistency compounds into results that don't reflect your potential. Now, if you step back and look at both clearly, you begin to see the similarities. Both trading and investing require discipline. Both require risk management. Both demand that you understand yourself as much as you understand the market. Both punish emotional decisions and reward consistency. And both, when done correctly, can create financial growth. But they also share the same downside. They both expose your weaknesses. They both amplify your habits. And they both require time to truly master. The difference is in how they shape your life. Trading is active. It demands your attention, your presence, your energy. It can create faster results, but it also creates faster losses if you lack control. It is intense, and that intensity is not sustainable for everyone. Investing is quieter. It requires less constant attention, but more long-term trust. It grows slowly,
But that slow growth becomes powerful over time. It is less exciting, but more stable. And for most people, stability creates better outcomes than intensity. So, what is the best choice? The best choice is not based on hype, it is based on alignment. If you are drawn to speed, can handle pressure, and are willing to develop strong emotional control, trading can work. But it demands full commitment, not curiosity, not part-time attention, full discipline. If you are drawn to long-term growth, can stay patient, and are willing to trust a process without immediate reward, investing becomes more powerful. It aligns with how wealth has historically been built over time. For most people, investing is the more sustainable path, not because it is easier, but because it reduces the chances of emotional mistakes. It allows time to work for you instead of against you, and it creates a structure that can grow even when you are not constantly watching it. But the real advice is this: do not choose based on what looks exciting. Do not choose based on what others are doing. Choose based on what you can remain consistent with for years, because consistency is what compounds, not intensity, not bursts of effort, consistency. And now the question becomes simple, but not easy. Are you choosing a path because it looks profitable, or because it is something you can truly commit to long enough for it to change your life?